Hey everybody, welcome back to the channel. This is the second video of the Thursday, July 13th PM Silver Bullet. I want to show you what a lot of people took and how they could have avoided the loss. Because I've seen it on Twitter, there's a lot of people that took a loss and they don't understand why. So I just want to do a quick video of how you could have seen it differently. If you watched my previous video earlier today that I posted about this, you'd see that I had higher time frame narrative, and my narrative was I was looking for longs and how we took two trades and they were successful. Today I'm just going to show you if you don't have narrative and all you're looking for is market structure and a reversal, you're assuming there's a reversal, you're basically projecting what you want to see in the charts. I'm going to show you why you lost. Okay, what you could have seen, how to avoid it. And I am going to go candle by candle, and I am going to buy and sell just like a lot of people did to show you how you could have possibly broke even. So let's get started. Okay. So we got some relatively equal lows down here. And this is where buy side is at the moment. There's also buy side right here. Okay. Let's just leave that on right there for right now. Okay, so that took out buy side liquidity right there. Okay. We're going up. So now we're looking for a reversal. We're looking for our market structure shift. And then, like I said, this video I'm going to tell you what a lot of people saw and how they read price action and why I saw it differently, and that's what my first video was about. And now I'm doing a video to show you how they could have mitigated their loss a little bit here. Okay, let's just mark out what we think our market structure shift would be. Okay, a lot of people see price came up, price came down, came up, came down, and then this started that move. So a lot of people use this as their market structure shift. Okay, so we'll use that for right now for this discussion. All right, so now there's your market structure shift to the downside, right? So now all we need is a candle here to leave us a fair value gap. Come in, we can go short. We'd probably be targeting down here, right? Relative equal lows. That's what people are seeing. Okay, so there's a fair value gap right there. This is looking good. This is 2022 model right here, setting up. I mean, I wouldn't use this as a market structure shift, but a lot of people did. So let's just say right here, that looks great. What else do we have? Well, this is a mitigation block right here. You have a high, a low, a lower high. Failed to take this out. Price traded down through it. When price comes back up to it, you can take a short entry and, again, target your relative equal lows down here. Right? Let's just mark our relative equal lows, what our sell side target is. All right? Sell side draw on liquidity down here. So we need it to come back up and we can get in. That's good. I would like to see it get the mitigation block for a better entry. So when it comes up here or taps into that, I'll take a short. All right, so we're going to take a short right here. So where'd we enter? We entered at the start of our mitigation block, in the middle of our fair value gap. It's past right around consequent encroachment. So we're really good right here. So we got in there. Our stop would be one tick above this. So that's good. All right, let's see how this plays out. All right, let's see. Let's mark out some things. We have a fair value gap right here. We have another fair value gap right here. Okay. So with those are going to be, those would be looking to go long. Those are that fair value gap. So that's going to be resistance. So I want to see how price reacts to these. Okay. If it blows right through it, we're good. If it hesitates and respects these, then that's reason for possible lowering our risk, moving our stop to break even, and allowing price to do what it's going to do. Maybe we're on the wrong side. Okay, but we just we'd like to see them ideally just cut right through them and just completely disrespect them, and then use them for support to go down. Okay, as inversion fair value gaps. So that one is respected right there. See how that next one opens, cuts through it, but again the body respects it, right? So what do we have here? What's this up close candle? What is that? Well, that's a breaker block to the upside. So you've got a low, high, a lower low. So it broke this low, and then when it trades back up through it and comes back down into it, you can take a long entry. So now we have a wick that is respecting the breaker block. The body's respecting the fair value gap that's on top of the breaker block. So this should give you reason to pause and to see what price action is doing. The next candle is going to be very telling. If it cuts right through it and closes down here, we're good. If it respects this, I would be lowering my risk to at least halfway, if not break even. Okay, because you have a major roadblock right now. You have a breaker block and two fair value gaps to cut through. When it cuts through here, you're golden, right? But you've got major roadblocks right here. So let's see what the next candle does. Okay, I'm going to lower my risk. I'm going to buy one right there. I'm going to lower my risk. So I took one right here. I'm in a little bit of profit. Woohoo, made 50 bucks. And my stop now is break even. Now my stop is now break even. Okay. And I've taken a partial. Why? Because I have all these roadblocks and price is respecting these fair value gaps and this breaker block. So the next candle, let's see what happens here. Would have taken us out. So we're flattening it. We're flattening it. It would have taken us out. Because I would have been in one and break even right here. Okay, so I made 75 bucks, probably only $50, but you made 50 bucks. And where does price go the rest of the time? It goes right through. If you watch my other video, you'll see where price went. So you see these opposing PD arrays, and that's why a lot of people don't mark them on their chart, and like they're tape reading, but they need to continue tape reading when they take their entry and find out, is price respecting PD arrays in the opposite position? Are they disrespecting the PD arrays that are for them? You know, what's price doing? And when they do this, you would have entered and got out made 50 bucks, $75, broke even, whatever. You wouldn't have taken the full loss that a lot of people did. So if you watch my other video, I had a narrative of why we were going long, and then you can see in this one how you could have avoided taking such a big loss. So I hope that is helpful.